What is up, everyone? This is your host, Limitless, back with another one again on this show. As you already know, this is where we talk about politics, economics, and propaganda. Anyways, I hope I'm finding you all in peace, love, and light. You already know what it is. We're gonna get into, a few things today. Um, you guys bear with me, and you know, as usual, we'll go through um, the funny articles first. I like to do the funny articles. You understand what I'm saying? First, here, Forbes JP Morgan CEO Jamie Dimon has followed the lead of Citigroup, the major New York City based bank, and told employees Monday that they risk losing their jobs if they don't get vaccinated. Again, guys, we know what the agenda is. They're trying to force drive everyone out of the jobs so they can bring in automation. This is nothing new. We Anyone that's observed the environment, that's kept up to date with everything, these private corporations are doing, alongside the government, it's no brainer. We know what's coming. So regardless of whether you're jabbed up or not, you're going. It doesn't matter at all. But with all that being said, there's a few things we're gonna have a quick look at today, so we understand um, where we're heading towards as usual. Let's take a quick break, and we'll get right into it. Welcome back, everyone. Appreciate you all joining me again. Always remember, share with your family, friends, and loved ones. This is Limitless Talks. This is where we talk about everything, everything that has to do with the world. And you know what is already. We make sure we keep up to date with everything that's going on. So, the first article here, Nicola Sturgeon pinpoints date for Indie Ref 2. I'll do everything in my power. Nicola Sturgeon has vowed to do everything in my power, well, in her power, in this case, to ensure a Scottish independence referendum takes place by the end of next year, upping the stakes in her battle with Westminster. If you go back and, look into how the United Kingdom came about, it was just uh, England by itself, then it became Britain, then it became, United Kingdom. This, this, the countries that makes up Britain also makes up United Kingdom, but including Northern Ireland. You understand what I'm saying? After the partition, but that's not the point of this. The point of this is part of the agenda is to basically break up any form of unity amongst any nation. So you're gonna start seeing a lot of these confederates, UK, America, the EU bloc. You're gonna see all of them. Eventually, they're gonna break up within the next decade or two, and this is not, something that's an opinion. This is a fact. You understand what I'm saying? Because the agenda is to break every single country up because it will be easier to control, divide and conquer. That's the MO in this situation. So, as we already know, it's about time. Um, you know, uh, the Scots get apply for their referendum. They've been talking about this for the longest, for the longest. So we know it's gonna happen, and just like she said, by next year they will do what they need to do. Anyways, moving on to more interesting stuff. We've got Paradigm Sequoia to invest 1.15 billion in Citadel Securities. Now, guys, we know what this is. Again, automation. Every every single stock you see on the stock market today is gonna be put on blockchain. There's no longer gonna be a broker in between all of that. Nope. It's just gonna be algorithms, and they're gonna run everything. You understand what I'm saying? The move brings Ken Griffin's Citadel closer to the world of crypto. Again, we know what the game is to tokenize every single stock and to be put on blockchain. Venture capital firms Paradigm Capital and Sequoia Capital have agreed to invest $1.15 billion in electronic trading giant Citadel Securities. Citadel announced on Tuesday. The move brings Citadel Security closer to crypto as Paradigm focuses on investing in crypto and Web3 related firms. Paradigm was co-founded by Fred Ursam and co-founder of Coinbase, and Matt Huang, who previously led crypto investments at Sequoia. You see, when you read that, it's the same people that literally just move about from one organization to the other. Their friends, their buddies, they know each other, so they just rotate amongst each other to basically bring around whatever agenda it is that they're trying to accomplish. And again, the main principles: you follow the money, and you can never, ever, ever lose, because they don't want you to uh, understand what they're doing or what their next move is. But part of the deal is they have to tell us what they're doing. And for those who pay attention, awesome. And those who aren't paying attention, they won't know the difference anyways. But you already know what it is. So moving on, we've got NFTs are the next advertising opportunity for fashion brands. Here's why. Guys, we know again NFTs, especially when it comes to the metaverse, gamification, and all those sort of things there. The whole idea is to, you know, uh, fool the people into forgetting about their reality and going into the fake world. That's why they're trying to make that place exact replica of the real world out here. You see all the clout chasing, who's got the latest brand on. It's all gonna be the same. The only difference is this time it's not gonna be real. You understand what I'm saying? They're only gonna be able to see their stuff on the screen or when they're wearing the VR headset or whoever's looking at them in the metaverse. It's not real. And smart money would not be putting uh, his or her money into something that's not real, regardless of what the market is commanding right now. You understand what I'm saying? We think in terms of um, long term. We think down the road what's likely to happen. And of course we know NFTs go way more use case than what they touting right now, because all we just see is digital art, digital this, or digital clothing. Who cares? You understand what I'm saying? Nobody cares, but that's what they're pushing. But we know, non-fungible tokens are way more valuable than what they're trying to use it for right now. Which brings us to this. This was a 2022 CEO investor letter from the CEO of Grayscale. As you can see, there, Grayscale investors, as we settle into a new year, have been reflecting on Grayscale's growth, the state of the crypto ecosystem, and how our world has evolved. It is easy to forget how much can change in a year, and looking back, it is remarkable where we are at today compared to 12 months ago. And that's the nature of the beast. Things gotta move on because we know they've got an agenda, and Grayscale's got a big part to play in this. You understand what I'm saying? They're part of that ecosystem that assists the Fed in basically manipulating the crypto market. Basically, you know what I'm saying? They do it all the time. You see, a lot of their products, you go behind and find out, who's funding it, because they obviously they won't share their clients with us. We don't know who their client is, but with insight, we know they work very, very closely with the feds. But the main thing I want to show here is, if you come a bit down, you sort of talk about what we can expect in 2022. And here we see number one, crypto infrastructure development. Just as the physical world needs roads, bridges, and tunnels, the digital economy needs the tools and services that facilitate access to and usage of crypto. Crypto infrastructure such as exchanges, wallets, and analytics software will continue to be a key growth. Of course, we know. That's what's going on right now. They're building Industry 4.0. That's the whole idea right now, to bring in, all everything in this world. They're gonna digitize everything completely. And of course, you need a robust ecosystem to facilitate a lot of those economic activities. So, which is why we're here, to make sure we are on track. We're not, we're not being left behind, if you understand what I'm saying. Number two, it says there are more protocols than ever before. Of course, as we understand, there's 16,659 crypto. A lot of it is garbage. Not even a lot. Most of it is garbage. 90% of these coins aren't making it. 90%, because about 50% don't even have a use case. You understand what I'm saying? the remaining the remaining 40%, a bit of illegal activity here and there. A lot of them are not, there to solve any problem, or, to be used for anything tangible. They're just there to launder money, and it's, a way for the feds to park a lot of the dollars they're printing and all that. They need somewhere to park the money, guys. That's why we're saying that 2 trillion. You understand what I'm saying? $2 trillion. So we know what that is. Sorting through these protocols to separate the wheat from the chaff continues to be challenging. Again, same thing. You understand what I'm saying? Because all those 16,000 coins, they're not making it. 3. Expansion of Web3 and the metaverse. Our experience with the internet as we know it today, Web 2, is defined by large centralized corporations, i.e., Google, where we, the users, are the product. Our data and the means of revenue generation. They sell our data every time. We know what it is already. Expansion of Web3 and metaverse. You see, they're focusing heavily on the distraction for the masses, because they need to keep the masses busy, so the masses don't really have the time to even want to sit down and analyze their environment and say, oh, hold on a minute, what's even going on here? What's the purpose of all these things? Like, what's the agenda? What are we trying to accomplish with this? But when you look closely, they want to build this first, so they have somewhere to park the people while they continue to build the economy. Because believe me, gamification, metaverse, and all that will be ready before even, the blockchains and ledgers with proper use case come into force. And that's the plan. Our experience with the internet as we know it today, Web 2, is defined by large centralized corporation. We've read that. Which includes the metaverse, presents opportunity for a digital future where the focal point of societal engagement, commerce, gaming, entertainment, news, and social networks, to name a few. You see that? Where people can just trade, digital stuff amongst each other. Nothing is real. The money is not real. The clothes won't be real. Their house they're gonna be living in the metaverse won't be real. Some people will even come in the metaverse, not dressed as themselves. They might be male in real life, but coming in as female. You know what it is. NFT use case beyond digital art. The public discourse and the momentum around NFTs demonstrate the material value of digital verification. Now, obviously, we know NFT. The only thing a lot they've been showing us a lot is like digital art. But we know NFT is way, way more than that. You understand what I'm saying? You can have a non-fungible token key card that verifies you when you go to a door to say, right, unlock the door. That's a form of a smart contract. You know what I'm saying? You can have a house on that's backed by a NFT smart contract. That can be shared among several people. In terms of ownership, it's it's amazing what you can do with NFT apart from digital art. I mean, digital art is just the foundation. You understand what I'm saying? New regulations and policies. We know 2022 is gonna be big. We've got ISO, we've got SWIFT, we've got the Chinese digital yuan launching. We know they're ready for cross-border settlement. They're ready for cross-border payment. Now, from 2022, we're gonna see a lot of regulation come in. And just like I said, some people believe, this is counterintuitive to crypto, but nah, we can't even use crypto right now because they need to pass a legislation to allow this, to allow us to use crypto in this economy. They will need to. So, guys, pay attention to, a lot of these things that's going on. Read their newsletters. Make sure you get a good idea of the direction of where we're going. And just like they've said, this a key, very very key part of the digital economy that will be, improved in this year. They're gonna blow, guys. They're gonna blow. So moving on to the current state we're in. So currently at the Bank of England, we've got interest rate at 0.25, and look at this. They've got the quantitative easing at 800, well, total 895 billion, split between 875 billion gilts and 20 billion corporate bonds. Again, using public money to bail out private companies, it makes no sense to me because this private company does not bail out public in any way, shape, or form. So we got inflation, current inflation rate target 2%. We're at 5.1%. The higher this figure goes, the higher this is gonna go. So, and of course, hopefully, uh, hopefully they slow down on how much bond purchases they're making, but you never know. They make it seem like they're slowing down, and then two twos, they blow up. So moving on to the market, as we can see, currently volume that's very low, 89 billion, with just over 2 trillion market cap. Um, let's look at some of the stable coin. Okay, all right. So we're still down on USDC on the 7 days, and on the 7 days for Tether, we're up a bit. So we might get a bit of a uplift in the market in the next couple of days. So when you watch the stable coin volume, it gives you an indicator whether the market will go up or down, because that's how they bring money into the crypto market, and it's also how they remove money from the crypto market. And another indicator to watch out for is grayscale. If grayscale is buying, we know the market is about to move up. If grayscale selling, we know the market is about to go down. And for the past couple weeks now, grayscale has been selling. Like we've showed in the previous videos, grayscale was at the asset under management was at about 61 billion, and now they're at 37.4 billion. They've almost sold half. And we know what's going on with this. They're re-strategizing. They're changing a lot of the asset in their fund basket. So we know what's coming. You understand? Anyways, I want to show you guys this video right here. You know, when the market goes down, you know, a lot of us, we get scared. We think, oh, it's all gonna, you know, it's all going to shit now. What's gonna happen? This, that. But never be scared of the market. Always take your time to analyze, you know, listen to different views and filter out the garbage, because there will be a lot of propaganda. You understand what I'm saying? You know, you'll see a lot of these billionaires start coming out telling you, oh, see, we told you crypto's no good. It's going down. It's gonna go. That it's gonna do this. They just wanna buy. And if you listen to Teeka Tiwari here, it will explain everything to you. So before I go, I appreciate you all. Remember, share with your family, friends, and loved ones, because we all need to know how the world works. Because that's the only way we're gonna be able to safeguard ourselves from what's coming. And the government is not gonna tell us what's coming. You understand what I'm saying? If anything, they're gonna make it seem like there's nothing wrong. So, without further ado, peace, love, and light to every one of you. Enjoy the video. Peace.
It is. It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid 90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, you know, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
you know, hang on just a second before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, I'm just taking the junk off the table.
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage, right? It was virtually impossible to get a mortgage during this time. Exactly when institutions were buying. And then the dot-com crash in 2003, if you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, I know people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying
His company is buying it.
it's just, I mean, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out?
Yeah.
His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk. And
I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together. They all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is
start
over.
selling, yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think,
last year, right?
Last year,
yeah.
Okay? Do we have that chart of the 5 crashes of Bitcoin?
Right. It was 30%. Right, I think 4 of them were 30% and 1 was 40%.
And this is, here it is. This is 1 year.
That's just last year. Yes.
Explain this.
So I had recommended Bitcoin back here, and in 2017 we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people.
A 40% crash is scary.
That's what happened in July. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class.